We are going to learn Chapter 3 KSSM Form 5 Consumer Mathematics Insurance. The first thing we need to know in this chapter is that risk is the possibility of a disaster that cannot be avoided, and with insurance that is available for all ages, you'll be given a financial protection if unfortunate events happen to you. Insurance transfers risk from individuals to insurance organizations, and it is a contract signed between the insurance company and the insurance owner. Policyholders pay premium to the insurance company according to the contract offered, and they claim and receive the compensation of the loss covered by the insurance, while the insurance company pay compensation for the loss according to the contract and determine the conditions and premium in contract to offer it to customers. Principle of indemnity is the key principle in the insurance systems. This principle is to restore the financial position of the policyholders to the pre-loss condition, but this principle will not allow policyholders to gain profit from the insurance purchase. There are three types of insurance, that is, life insurance, general insurance, and group insurance. First off is life insurance. Circumstances that life insurance guarantees the payment of a stated amount of monetary benefits to the policyholders are death, critical illness, and loss of ability. Next is general insurance. It consists of motor insurance, travel insurance, fire insurance, medical and health insurance, and personal accident insurance. The first type of general insurance is motor insurance that consists of 4 different types of coverage, that is ACT, third-party, fire and theft, and comprehensive. As we can see, comprehensive insurance has more coverage than the rest, and ACT has the least coverage amongst all. Next is fire insurance. It provides coverage against damage caused by fire, lightning, and explosion. It also may incorporate additional coverage such as hurricane, riot, and flood. Next is medical and health insurance. Some of the policies of this insurance are hospitalization and surgical insurance, critical illness insurance, hospital income insurance, and disability income insurance. Next is personal accident insurance. It provides coverage in the occurrence of the policyholder suffers bodily injuries, disability, death that result directly from the accidents. Travel insurance provides coverage against death, permanent disability, loss of luggage, passport and money, and medical expenses. Group insurance for organizations provide to employees in the event of death, disability, hospitalizations, and surgery under certain policies and coverage limit. It also provides to people in the event of death, paralysis, disability, and wheelchair allowance under certain policy and coverage limit. Why should get an insurance? First, as a financial aid to the family in the occurrence of your disability, critical illness, or death. Second, managing life expenses, debts, and commitments in the events that you are unable to work. Third, paying for higher medical expenses. And lastly, as compensation for loss incurred. How to investigate, interpret, and perform calculations involving insurance rate and premium. You may pause the video and take a look at this question. A. What are the factors that influence the differences in premium for the travel insurance? As you can see from the table, the factors are duration of travel, number of people insured, and the destination. Next, B. Why is the premium higher for a longer travel period? The answer is a longer travel period increases the probability of loss to the policyholder while abroad. C. Shai's work as a photographer requires him to visit many countries in Europe within a year. He will visit a country for 12 to 15 days. Which insurance is suitable for Shahid to buy in relation to his job? Give your reasons. The question did mention about the destination, which is Europe, and duration of travel, which is 12 to 15 days. However, the answer should be Shahid should buy annual premium travel insurance for countries in Europe as it is more economical than buying insurance for 11 to 18 days per trip. This relates to his statement of his work as a photographer that requires him to visit many countries within a year. Next, how to calculate premium for life insurance. This is the formula for premium. First, take a look at this question. You may pause the video. A. Why does the premium rate increase as the age increases? Premium rate increases with increasing age because the life expectancy of each person decreases with age. Next, why does the premium rate increase for a smoker? Because the probability of a smoker being exposed to illness is higher than a non-smoker who lives a healthy lifestyle. B. Based on the table, calculate the annual premium for each of the following situations. Mr. Guan wants to buy an insurance policy worth 100,000. He is 39 years old, healthy and a non-smoker. Based on the question, we could determine that Mr. Guan is the 39 years old non-smoker male, which would help us scale down the face value. Next, we use the premium formula to get the annual premium for this situation. Next, Madam Shapova is 36 years old, healthy and a non-smoker. She wants to buy an insurance policy worth 250,000 ringgit Malaysia and wants to add on a critical illness policy. Syarikat Insurance XYZ offered a critical illness policy with a coverage of 30% of basic face value and a premium of RM1.77 per 1,000 ringgit based on Madam Shapova's age and health status. From the question, we could determine that Madam Shapova is a 36 years old non-smoker female, and that would help us to scale down the premium rate from the table, which is RM1.50. Then we determine the total coverage for critical illness by calculating 30% of the basic face value. Madam Shapova's annual premium equals to annual basic premium plus annual additional premium for critical illness. After calculating the annual basic premium using the premium formula and add it with the annual additional premium for critical illness, the answer is RM507.75. Next, how to calculate a premium for motor insurance. Act policy and third-party policy depending only on the engine capacity of vehicle. Comprehensive policy and third-party fire and theft policy depending on the engine capacity and the market value of the vehicle when you want to insure it. For the third-party fire and theft policy, the premium rate is 75% of the comprehensive policy's basic premium. The table below shows the premium rate under the motor tariff for motor policies insured in the Peninsula Malaysia, Sabah and Sarawak, and the formula to calculate the basic premium of the comprehensive policy for Peninsula Malaysia and Sabah and Sarawak. First, take a look at this question. You may pause the video. Based on the questions, we could determine the location and the engine capacity of Proton Exoras owned by insured Ramday, which is in Peninsula Malaysia and 100 and 600cc. By referring that to the table, you will get the premium for the first 1,000 ringgit, which is RM305.50. Next, we calculate the rest by multiplying each 1,000 ringgit with the amount obtained from the other table. Next, we add both value and deducted 25% of the amount to get the final value. For third-party fire and theft policy, we take the gross premium from the comprehensive policy table just now to get our basic premium, then we deducted 25% of it to get our gross premium. For the third-party policy, we could get the basic premium from the table and deducted 25% of it to get the gross premium. There are two problems involving insurance that we will learn, that is deductible and co-insurance. What is deductible? Deductible is an amount that must be borne by the policyholder before they can make a claim from the insurance company. Deductible is commonly found in the contract of property insurance, medical and health insurance, and motor insurance. Its provision is not in the life insurance and personal liability insurance. First, take a look at this question and you may pause the video. Her loss in March and August exceeds the deductible amount, hence a claim could be made, and the amount of compensation is the total loss deducted by the deductible amount to get the amount of compensation. However, the amount of loss in July is less than the deductible amount, hence a claim cannot be made for this loss. Next is co-insurance in property insurance and health insurance. First, co-insurance in property insurance. The amount of required insurance equals to the percentage of co-insurance multiplied the insurable value of property. First, if the insured value equals to the amount of required insurance, the amount of compensation will be equal to the amount of loss deducted by deductible, but this only applies when the amount of loss is less than or equal to the amount of insurance purchased. Next, if the insured value is less than the amount of required insurance, the amount of compensation will follow the following formula. Lastly, if the policyholder suffered a total loss, the amount of compensation would be amount of insurance purchase minus deductible. Take a look at this question and you may pause the video. The amount of insurance required by Encik Ismail for the house is 80% of the 350,000 ringgit, which is 280,000 ringgit. B. Roman 1. If he insures his house at the amount of required insurance, the total loss should be deducted with the deductible to get the final answer. Next, for B. Roman 2, the sum insured is less than the amount of required insurance. Therefore, we need to use the formula from before. The co-insurance penalty equals to the total loss deducted by the amount of compensation before deductible. C. If Encik Ismail's house suffered a total loss, the amount of compensation should be the insured value of his house minus deductible. Next, co-insurance in health insurance. In health insurance contract, co-insurance is stipulated by the percentage participation clause. Policyholders is required to bear a portion of the medical costs covered by the contract at an agreed rate after taking into account deductible provisions. For example, 80-20 co-insurance percentage participation means that the insurance company will bear 80% of the medical costs covered by the policy and 20% will be borne by the policyholder. Take a look at this question and you may pause the video. First, we minus the deductible from the medical costs. Next, we calculate 75% of the remaining medical costs after deductible to get the cost borne by the insurance company. Next, we calculate 25% of the remaining costs after deductible and add it with deductible to get the cost borne by Madam Cheng. That is all. Congratulations, you have finished Chapter 3 Form 5 Consumer Mathematics Insurance.